Hmm. There we go. Now we're live.
Good
Stone, I'm
morning,
sorry, I can't find that candle anymore because it looks different now, even though it's still the 30-second chart I'm looking at. When I scrolled back in the history, it changed the shape a little bit, that it's not the same thing that I was looking at before. I don't know why.
You know, sometimes that happens with Weeble. Jeremy and I he'll say something and I'll say, well, it looks different on TOS. So that's okay. I'm sorry. I didn't have it. I didn't have my Weeble on my desktop.
Better
Uh-oh,
late than
let's
never,
see.
they
I got a
say.
tweezer top on a 2-minute. Maybe it's going to fake us out again.
Yeah, I see an M top on a 10-second as well. But it's got a retrace pattern to 37, 20, 50. Yeah, this is going to set up a grind here. Hold on. All right. Hello, YouTube. We're finally live now. I tried to go live at 9:58, but I had some technical issues. But here we are now. Welcome one, welcome all. As promised, I'll get into drawing out some more dope on Spy here for you guys, and I think we're gonna have a fun day trading stuff.
Dope. Oh, we're coming down.
Yeah, we're
Maybe, maybe not. Let's see. I got that hammer. Let's see what time it is. 10. Oh, we got 20 seconds. So we'll see.
dare me to get the 5-second chart out on Spy.
That red hammer. 10 seconds. If we get that red hammer on Spy, I wonder what that's going to do.
If you guys are gnarly enough to trade a 5-second on Spy, I commend you. I trade a 10-second chart on the ES, but it's crazy how the candles look so much better on this Webull app with a 5-second chart than they do on a 10-second chart of Trade-O-Vate. But I can go and pick these pivots out. I can go and pick these reversals out. I can go and pick all these little really short-term patterns out and just nail them. That's why I like, if you guys have seen some of the screenshots I posted with the amount of trading I did on the ES over the past 2 days, you would wonder why I'm not like exhausted and curled up in the fetal position on the floor sucking my thumb.
Don't tempt fate. Listen to what I'm telling you.
Right?
I know why Sig told you that. I have experienced this before. I have experienced adrenal fatigue in a close friend, and I have experienced it myself. And it happened to both of us when we were in our 40s.
Ooh.
So, yeah, that's why Sig said that to you. And remember what he does.
Oh, yeah.
What he's doing right now. Remember
he's
what
getting
he's teaching.
a PhD in psychology. I know all about that.
That's exactly right. So just.
But I mean,
but you do well at the R&R already. I know, because you're very like, weekends are for family. You know, you're out there. Not only are you trading crazy, you're doing freaking stoppies in your driveway at 44. So getting a bicycle on the front wheel and just bouncing it around, and then probably still get on a skateboard and teach your kids tricks.
Yeah, I've well.
Part of your personality.
Probably 5 years ago, I taught my daughter how to do the pop shove it, which is kind of it's an old trick. It looks really cool, but it's really not that hard to do.
I'm giving everybody an insight into your personality, so why you trade the way you trade.
So that's the fun part,
evil
though.
Knievel at heart.
For me, it was maybe I'm like, okay, let's reference a silly movie. How about Divergent?
A silly movie. How about Divergent?
I don't let fears, stop me. It switches me on, but it's weird because I don't pick up adrenaline from it. I just get calm, collective, and focused.
Looks
a
little funny.
Yesterday, I felt even more calm and collected than I did the day before. And both days, I mean, you look at the frequency of trading, you'd be like, what the hell is this guy doing? But then while I'm doing it, I'm just like, it's, my limbic system's just sort of doing it. I'm not really putting much energy into it. It's just a matter of I see chart, I do chart, click, That's it. There's no fear, there's no adrenaline, there's no emotion whatsoever. It's just relaxed. and just enjoying it. And it's like I keep telling people, and I would consider this like, I have days like this where like I'll have what I call a good brain day, but the other side of that is maybe it's just that I don't have any emotion. I'm always saying trade the chart, detach yourself from money if it helps to set that emotional state where you can get the emotions out of your trades, and just trade the chart. And I gotta say, maybe it's just that I have moments of clarity where I just do absolutely nothing but trade the chart. Some days I do have a little bit of anxiety in it, but past 2 days just been absolute calm, collective, focus on the chart, trade the chart. Nothing else really mattered. And I'm still like, outside of that, I'm running this with my lizard brain, and then outside of that, I'm answering complex questions and talking about stuff on our live stream, and it's just, it just ran seamlessly for the past couple of days. That's just all I can say. Here's a nice breakout. We're getting another leg. Where is this coming from? This is all rebounding, and I think we're going to nail. Remember, let's look back a little bit. Oh, dang it, I did it. Let me go back to the 15-minute chart. That diamond pattern, man. So we got our angular resistance from the compression side and our angular support from the expansion side.
Look at that.
Lining up today's price action.
A big
and
bar.
It looks like we may be taking a visit back to that previously was support. We're running back to it as resistance now. So let's see what happens next.
We going back to 382 today? That's what I want to know.
I don't think so. I think
all right, we just crossed the that last candle closed above the middle line of my 15-minute channel. Oh, and so also closed above the 15, my one moving average on my 5-minute chart. So we could
maybe 372.50. I mean, we can certainly smoke that. We got a nice clean 5-minute or 15-minute tweezer there on the opening. We could push power and run up to 377.50 again.
See. IWM's at angular resistance right now.
We shall see.
UVXY was in a
there's your 1 minute 200
megaphone
period.
Expansion.
FRM down here in a descending channel. That's going to be a trader stock for show. We're going to do some things with you.
The 1 minute chart over here.
And in the process, we're going to help one of our more recently outspoken members. We get people that just sort of sometimes just sort of start chiming in on our voice channel, and we encourage that. We love that. And this user is trading AFRM, and we're generating income on this as this person bought it a little higher than they would like. We're going to generate some income selling options on this thing and see if we can get that cost basis down to something reasonable. Okay, so looking at Starbucks here, we just made a bullish measured move down from that V bottom there, and we're back on angular resistance. So I want to see if equities are going to start tipping over here. 1 minute 200 period, we just had clean reach action with a bearish engulfing. Yeah, we're running that down, and we'll probably strike support here in a moment. Treat this like a little rising channel.
Yeah, look at that. I see it now.
And we'll get to a point where we can start trading these methodically without even thinking about it.
Well, my trailing stop has completely screwed me over today.
You know, the funny thing is, Tuesday and yesterday I didn't use them. I just did everything manually. And when the market is very volatile, they will almost always kind of burn you out of a trade. It'll lick up, grab your stop, and screw you, and then run down the direction you had. So on volatility days, I don't tend to use a trailing stop, but I do on relatively flat days or days that are just moving kind of slow that I can keep in control on. Those are the days where my trailing stop really does perform. But other than that, if it's volatile, dude, you might consider trying a couple trades without it first, just to see how you do. But just stick to your analysis skills and trust them.
Last time I tried to trade without a trailing stop, it went really bad.
Oh yeah, that's why I try to at least put a stop in.
There's got to be a control. You could put a fixed stop in so that you make sure that your loss is at a certain point. That's fine. 370.25 is the retracement of this little guy here. And I didn't mean to throw a pivot there. I meant to throw a line there. Sorry.
So that's bumped up against that 200, reject it. But then kind of found a little space down here on this pivot. 370.90 something. 7. And
close enough.
We did a little thing there.
This is the candle you trade. So you got the break, but it bounced here. This is the candle where you decide whether or not you're going to take a trade or not.
That 5-minute on SPY right now. See how this candle closes, but that's bar spinner bar so far. No rhyme intended. I didn't mean it.
And that's why you wait for this candle.
Anybody want a peanut? Inconceivable.
Inconceivable.
It looks like an end pattern almost. That is a little morning star for sure. That's a small descending channel right there. We're heading back up.
Back to regression, back to 200. That's why we wait for that break. We didn't get the break we wanted. We didn't take the trade. It is that simple.
And that is an inverse head and shoulders on the 1 minute. It's an ugly one, but that is an inverse head and shoulders.
2, 3. Yes, it is.
Oh, I caught some of that on the way up.
Nice work.
Good. Make up for that damn trailing stop.
And that pivot is at 372.
Uh-oh. Look out. Let's see.
And look here. Opening high around 372. All right. That's 100% retracement in the opening high. What's likely to happen next? Look further left. Tell me what you see.
The left. You're on a 1 minute there looking for the left.
Yep. Let's go from the control bar here at 8:30, which is where we had that little news pop there. Or news drop, sorry. Let's run out an angular here. Let's mark that sucker in white so we can see it stand out.
We are in a descending channel.
Oh, even better. We got a megaphone.
A megaphone. That's what's happening on
And I'm kind of
UVXY.
pushing it through the range of that to where I attack it here instead of down here.
Well, we're building like we had not building, but wick there. Dun 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 dun.
So there's a funny thing about descending megaphone patterns. I'm going to show you a little trick with these.
They tend to break bullish.
They do tend to break bullish. Let's make this one orange. How about, okay. So we got our bullish measured move, V bottom reversal out of this, right? We had our bearish measured move, bullish measured move, retraced it almost 100%, right? So descending megaphones tend to break out a measured move from the center line. You'll see there's your bullish measured move. A third leg outside of this thing on resistance break would put us about the same height above the megaphone. It puts us at about 380 or 373.20, roughly, just using my eyeball. And when they do that, at the same time you got a rising channel here, and you can't break support. This is where those channels will just continue to run. This becomes set up for a bullish measure move after the break of the megaphone.
I see that red hammer on the 1 minute.
So let's let this candle regress a little bit, pull back. We're right at the resistance again on the 10-second chart. This is where you can decide if you want to take a long position here or if you want to wait for the break. This is the candle where you're going to see the most action. And let's go to a 5-second chart and see what that looks like. We're right up on that sucker and pushing off the 8 period with a hammer, but we're not quite getting above resistance yet. We still got a retracement, probably likely to form a pennant right in here with 1 or 2 more candles and then break. Boom, done.
Reach the open. We're moving to the top of the, that's the top of the 15-minute.
And if you're fast enough to trade this on a 5-second candle, cool. But I'm going to wait for the actual setup to complete. This is a 5-second chart here. I don't see anything tradable yet on the 10-second chart to go long here. Let's look what this looks like on a 1-minute chart one more time. Back to
We're
the
definitely rising.
back to the support line on that channel.
Double top.
Question, Jeremy.
Sure.
Can you set up hotkeys on Tradevate?
Yes.
Yes, you can.
Sorry, I didn't mean to answer it, but yes, you can.
Interesting.
I still don't use them.
did
I just
that.
use the one button. But yeah, you
Yeah,
can.
I tried them, but to me, it's easy just to use the click. And then the other thing is if your keyboard falls on the floor, which I had happen to me while I was using paper trading with the hotkeys, all of a sudden I had 6 contracts in the wrong direction.
Oh no.
Remember that, Jeremy?
I do remember that.
No, I mean those devices they have for hotkeys, like a separate little keyboard.
That's what the phone's for. You can flip the DOM open on your phone and do just as good. Because then you use your thumb.
Yeah, never thought about that.
Yeah, it's quick. Da, da, da. Gold's at 1550 possibly, huh? Kind of keep an eye on gold here, guys. It's weird that it's going down in the way it is, but then again, dollar's inflated, so yeah, things are starting to heat up in that market. But my investment would be on the miners for sure, because they're the ones who are going to really get paid on this if it swings back up. Okay, so I'm going to try and get back to these questions now because this is interesting. So there was a strangle apparently on SPY. Even though the VIX didn't push the implied volatility up, sorry, not strangle, straddle, which is both a call and a put at the same strike. And for those to work, you have to have a couple things going for you. One, you've got to know exactly where you're expecting price to go. And when you set them up, you've got to pick a strike that will absolutely erase the loss of the wrong side of that position and then overwhelm with the production of profit on the winning side. And I don't trade straddles, and this is exactly why. Even though the VIX didn't push the implied volatility up on that enough to make it worthwhile, don't expect the implied volatility to go up the next day. And if you look at UVXY right now, in fact, I'm going to put it up here for a moment.
Yeah.
It's going down while the price goes up, sure. But what's that going to do to your straddle position? It's going to bury it. There's literally no chance that you can outrun the time decay to boot. So like if you're like a week out on a straddle like that, let me see, what was the expiration? Grr. Yeah, this would be rough. Let me read this question again. It's a long, wordy question, so it takes me a minute. I got to process it and then go back into it. So when you got something like FOMC as a trigger, that's where the first red flag goes up for running a straddle versus running a strangle. In a strangle, you're out of the money enough where there's a really, really good chance of the winning side erasing the loss of the losing side, because you're out of the money. Your delta is going to be lower and lower away from the money, for one. Two, the premium value of those contracts isn't going to change as dramatically as the ones that are at the money. So you can have a really good chance of taking a delta sweep versus a, I guess they would call that the increase in implied volatility, or the skew in the delta between the two, because they're going to be about the same delta to start, where a strangle would also be at the same delta to start. They're already against each other, and they're already losing to time, both of them, as fast as can be. You literally double your time decay when you trade a straddle. So when you're trading a strangle, your time decay is still doubled, but you have a chance of delta overwhelming on the break. So like, let's say you take, let's call it a $5 out of the money strangle on something like SPY with high time decay like that. If price moves more than $5, you have intrinsic value that's just going to smoke the loss. In spite of time decay, the intrinsic value is going to take over and beat that most of the time. But the extrinsic value that you lose, as far as time decay and the delta skewing against you on the losing side, is going to be about 50% of the gain intrinsically. So like, if you're running over and in the money at that point, about half of that intrinsic value is going to be eaten by the loss on the losing side, plus the time decay. So realistically, even with a strangle position on that at about $5 out of the money on either side of the FOMC leading up to it, if you timed it right, you could build some profit between those two legs and have a bit of a lifeboat to float you through that time decay. And that's why I like to teach how to leg into those strangles in the first place, because a lot of that is going to be eaten up by the time decay to boot. But if you're right and you get you're going to get a really big move, you're just not sure which direction it is, into something like FOMC, it's very typical. You're going to be much more probable of gaining a return on that of some sort versus taking the whole thing as a loss, even if you waited and closed the entire position at once, both legs. So the idea is, when you leg into a strangle to boot, you kick off the loser at rejection. So like yesterday, I had the call side and the put side on the Condor I opened, which was way the hell out of the money, dollar wides, $20 wide. That little spike in yesterday's price, I sat on my hands watching the ES for that little spike up, went over and closed my call side for actually, I paid 4 cents for that spread. I sold it at 5. That's a 25% return on that. Cool. Right on top of that spike, because I knew right at that 30.90 we were likely to get rejected, and it didn't quite hit it, so it was perfect. Ran down. And I rode the winning side down and closed that thing at 12. And it actually closed 2 minutes after the bell, which is kind of neat. Rare on Robinhood, but it does happen. And I had a limit order at 12 because I saw it pushing past 10. I'm like, I can sit it at 12. And then I got involved in my ES trading and was writing that down. Forgot that I had that limit order open. Went back to look at it, and I'm like, didn't quite fill, because right at the bell it was at 11. And then just after the bell, it tripped past the 12. So I've got to go look at the timing on that order and maybe see if it was a report delay from the actual closing of that for just the data being congested, or if it actually closed after the bell. I'm curious to know that. I'll dig that up later. But the point being is I had a rather nice return on that. I mean, that's pretty impressive. It's a 200% return on the winning side of that. And when I open these, I'm opening them 10, 20, 30, 40, 50 at a time sometimes. So it's sizable, and it's adding up in percentage. But had I kept that entire position open, it would have been just a simple 100% return, because I was nowhere near at the money on that spread. It was way the hell out there. But the loss on the 4 cent cost of the losing side at that point, if I would have just kept it open and rode the wave down, I still would have made at least 100% return on that. But if I tried to do anything like that where it was closer to the money, or even open a condor at the money, or what some people will do is they'll open a condor and they'll straddle the center, build a box, so to speak, nowhere near as high a probability of profit, and nowhere near as high a percentage of possible profit in that strategy, because you've got a lot to overwhelm, and you've got double your time decay, and you've got double your risk because you've got 2 at the money, and they're really expensive on SPY. Try something like that on Ford, you might break even on a straddle. That's where you got a lot less time decay on Ford. Even weeklies have very low time decay for an option train. And you can profit from a straddle on something like that if you get a sudden burst of volatility. Just the burst of volatility alone will even help regain stability in the cost basis of the losing side in that scenario. Doesn't work on SPY, especially when we had that situation where the VIX was just not doing it. So there is a time and a place for that strategy. FOMC was not one of them. You want to see like massive earnings swings, stuff like that, like we had last week. That's where that strategy would be more appropriate. And even then, it's not as feasible of a strategy to trade on something like SPY. That being said, there's other ways to skin this cat. You can sell those as a credit token. Then you got something. So that's a whole nother ball of wax. You're literally theta harvesting at that point, as Creed would call it. And he's got some in-depth stuff on that. And it puts you in almost a delta neutral position when you sell a straddle to open. But how do you sell that without covering it? Because you're naked on one side or the other. Think about that for a minute. So you're capped for your short put side. Say the SPY ran away, it went to like 400, and you're in a short straddle on that. The call side loss potential is infinite, whereas the put side is capped to the total value to 0. So you're kind of gambling there. And what a lot of people will do is they will lock that up by running just one wing of a, you'll have your short call at the middle, you'll have a long call a few strikes out to make sure that you collar that position so it can't get away from you. And calculating that is as simple as calculating your credit on the put side, and then you want to make sure that that credit's going to cover the cost basis if you have to exercise the call side. That's where you can kind of lock that up, where you're not likely to lose much. You're a little more likely to break even having to close that whole position, and you've actually got something where you can control things. Whereas if you're naked on that, good luck. You better have some capital because you might lose some. I couldn't even bear to think about that. But I like to be a risk-averse trader. I like to stay in positions where I have a known risk. I have a set of rules that govern my risk-to-reward ratio in any spread that I trade. And I'm going to make sure that even if I have a losing streak on these things, that I'm not going to blow my account up on that, continuing to lose and lose and lose. I'm going to have opportunities to analyze that trade and see what I did wrong and figure it out. I'm going to make sure that my total loss is capped, period. Bottom line, cap your loss. Make sure you're not trading in a silly position where your loss is not capped. Understand how options move a little bit more before you try those as an experiment, because they can, be so detrimental that it will blow up a very large account in a very short amount of time should you be wrong. So always start small. That's why we teach, the basics. We're teaching how to trade strangles. That we're working into a wheel trade strategy, because you got to understand how those options move to be able to successfully roll and continue with a wheel trade strategy and generate income steadily and without increasing your risk beyond what your means are. So, lot to say there, lot to compress and kind of think about, but that's the gist of it. And I keep it simple when I explain those. I know there's a lot more details that are involved in that, a lot of math, a lot of moving stuff, but the meat and potatoes of it is that simple. All right, let me see if I can get the next question now.
Boy, you was out there.
I was way out on that one, and that was a very wordy question. It required a very wordy explanation, and gosh, I suck at typing, so I could not have gotten all that out. And then I will, in response, tag a link to today's video, so we can actually have that response ready to be seen later if this person is not in our stream this morning. Okay, next one. Whew. Okay, I'm going to read this one out loud. This is actually a good one.
And I'm glad you know this stuff, Jeremy. You are a beast with it.
This is where I get a little mentally taxed, and I got to go and reference stuff that I haven't messed with in a while because I've been stuck on futures for a while. If you haven't noticed, so I got to get back into my options game. Great. And it just takes me a moment to kind of read things over and pick it apart and analyze it and spit out some output. Okay, I'm going to read this question out loud so it comes through a little better. Give me 1 second here. Okay. I was thinking on the moves SIG posted the other day with those long, far-off contracts and wondering your thoughts on long-term strategy to potentially add, say, 100 shares of a fundamentally sound company to a portfolio. For instance, buying a 2024 or 25 deep in the money contract on Apple or some energy ETF as an example. The idea being that you pay a premium on the contract way in the money. I don't know the right strike is, and have the option to buy the shares when they are hopefully worth quite a bit more. I am thinking in terms of my daughter's portfolio, instead of buying these securities now, locking in a price for a few years from now with the option to sell if it ever makes more sense to do so. That is a very loaded question. We don't know where the market's going to be years from now. We got some good ideas. You know, you can pull open your SPY monthly chart and you can see, well, even the weekly chart. You can see that generally, yeah, we can assume it's going to be bullish, but we are in some dangerous water. So it's hard to say where the bottom's going to be. And I would rather look for a reversal before I start going into something like that. And then comparatively, as an example, let me go into Apple real quick. So Apple trading at 140 currently. Look at the daily. That's been quite a crash channel on this thing already. Look at this. Yikes. That's our FOMC stuff, and boom. And I'm sure some of you have heard, and even SIG has actually coined this morning. I paid attention this morning. Some people calling it Bank of Apple. Apple's a big part of the S&P, right? So ideally it should be tracking with the S&P. Well, they don't. Look at the difference. We get similar moves, but for the most part it's much more volatile. And right now it's kind of anybody's guess on where the bottom is for that thing. But if I was to take a guess, I'd say about $130 a share or so. So what am I slowly getting at here? Risk to reward ratio is going to be key in that. And when you're buying a leap, it's anybody's guess. The buy right strategy is one that comes to mind in this situation where you can buy that long leap sitting way out there and just continue rolling weekly options against it. But the amount of premium you're going to pay for that leap, your break even or your cost basis should you exercise that contract, it's going to be astronomical compared to weeklies or even monthlies as far as finding your break even. Like, let's say you buy, you know, a $120 call on Apple. In fact, I'm going to pull the chain up and look at this real quick. Give me a second. I wish I could just pull it up on the screen here. But for some reason, Webull shows my account number on that particular screen, and I can't figure out how to pop it out and slide it over here. So I'm just going to look it up on my phone. And by the way, we'll get back to the Starbucks thing, but I should have assessed that on this bounce. That's okay. We'll get back to it. There we go, Apple. I have a long watch list, people. Let's go as far as we can. We'll use the super long one. We'll go with the January 17th expiration, 2025 call. Let's look at the 120. Cost on that is going to be $4,400 per share. The break-even price that Apple would need to be if you should assign that or exercise that is going to be $164.50 a share. If it's trading at 140 today, that becomes a bit of a problem. So we need to sell at or above 164.50 strike, right? In order to really have any chance of making an income on this thing. Let's look at November 11th, $164 calls. I mean, you're talking less than 5 cents a contract, and that's next week expiration. Let's push that to November 18th here. A little better. You got like 10 cents a contract there, but how long is it going to take you to cross that break-even point between then and now if price continues to go down, and you're also losing the premium that you paid on that long contract slowly in that time? Your break-even is going to stay the same, but your premium that you have in that is going to deplete, and you can't sell weeklies, bi-weeklies fast enough to generate income on that. Even if you're like trading in and out of daily price action like we do with the strangles and like we're going to be doing with the wheel trade, you're going to have a hard time catching up to that thing by the time you get close to expiration. And if Apple between then and now continues to slide the entire time, eventually you're going to be probably losing at least 50% of the capital you spent on the long position. Comparatively, if you bought shares to sell covered calls on and then sold covered puts, cash covered puts as well, you would do better. So long term, that would be the better strategy. I don't know that I would go with a buy right covered call on this situation. Let's go a little closer to expiration. Let's say we do 2024 $120 call. Break even on that one's a little nicer too. It's $160.15. Same problem though. Let's go look at the 160 calls closer to today's time. Where is it? There we go. And you get like 9 cents on the 11th expiration for those. The 18th expiration, you could do a little better, like 20 cents. Now it's a little better. So a whole year span, and you've got a better odds, but only a $4 difference in strike price for break even. So you got a little better chance of making that on the shorter term versus the longer term for the amount of premium you're going to be putting into this. But again, you're going to be battling the trend. So if this thing is going to continue to trend downward, and it can, we don't know, you're going to put yourself in a spot where it's not going to really generate enough income fast enough to work this out. There's another option though. Instead of buying a Leap call, how about selling a Leap put? That's where things get interesting. So let's go look at that 2025 situation. And do you see Apple getting below $100? That's kind of iffy. But look at how much premium you can get. For instance, we're
trending, aren't we?
Yeah, we're starting to. This
moment.
is looking like a measured move setup. If you look at the $80 put on Apple, 2025 January 17th expiration, you can get $455 a contract on that thing. Now we're talking, because your break even on that, if you got a sign on this thing, is $75.72 a share. That's much more reasonable. And if you do take early assignment on something dated that far away, it'll be a damn miracle anyway. But you could sell that put and also purchase your in-the-money call, and it'll offset the cost on that call. So you're willing to take assignment at $80 a share. Your break even on that situation would be $75.72. You can average that with your long position, divide it by 2 if you're doing just one contract each, and then you've got a different break even price, because they can't both expire in the money. You're long, you're bullish, but the amount of premium you spent is offset by the amount of premium you get from selling that put. And suddenly you've got a little bit more security in the situation. And the only worst thing that happens is Apple files for bankruptcy before then. I don't know if I see that happening, but anything's possible. This market is nuts. It's certainly a lot more to digest as far as math goes, but that would be a better strategy to do. You can run that, because you can add and subtract legs to it over time as well. You can continue selling covered calls at a lower basis, generate higher income per shorter periods, like 1 or 2 weeks out, and offset that premium much faster. Worst case scenario, you don't necessarily have to exercise the call side if it is going to come to that. And the premium you generate between then and now will lower and lower and lower the premium that you paid for the long position on a call, while still having the assumption that you're willing to take assignment at 80 with the lower cost basis on the assignment. Now you've got things working for you in 2 ways and only against you in 1 way, and in a way that's manageable to generate income on to offset. So suddenly you've got the ability to sell covered calls a little closer to the money. You can make more on them. Plus, you can swing trade them. You can run on daily price action.
Got a quick question.
Sure.
I can't modify an order or cancel an order I want to get out of on Webull. It won't let me do it.
Like an option order?
Yeah. Keeps telling me order cannot be canceled.
It might have been filled already.
It's not. It's showing as I still have a position.
Huh.
Everything just went blank on me.
That's reboot the app.
Yeah, let me do that.
I've only run into that.
Thank you. Sorry to interrupt you.
That's okay. I've only ever run into that when I go to modify it and the order was already filled. And sometimes it might lock up on you.
Let's see if it lets me do this. Thank you. Sorry about that.
I gotta go let some coffee out real quick. I'll be right back.
Are you guys there?
Yeah, it won't let me cancel an order. Hang on, I'm trying to figure something out, guys.
Well, hopefully you can cancel it. I'll catch you guys in the power hour. Have a good one.
Well, I got it done. Thank you. Yeah, catch you in the power hour. It filled. Hey.
Well, I managed to get, I think, like a 40-cent move on SPY, and then I sold it right before the trend started because I knew I had to go to lunch in like a few minutes.
Don't you hate that? It's like, I want to trade, but I gotta go. Good
well,
for
I'm happy
you.
I managed to get at least the 40-cent move, because at first I was watching that trend up on the ascending channel, and then it broke down sideways below the channel, and I was like, oh no, are we going down? And I was in the negative for about, I don't know, 15, 20 minutes. And then all of a sudden it started looping back up. And I was like, I need to get out soon because I can't watch this anymore.
Yeah. It's like, wow. So I've had so many learning experiences. Like just now, I was like, why can't I cancel this dang order? Why won't it let me modify this order? Thankfully, it kept going up, and I didn't lose anything, and took profit. So it was just a little slow. I would call it a swing. Scalps to me take seconds. And Webull, I do like the app to a degree. I mean, I like the no commissions.
So I did the calculation there. It was almost a 16% return. So I'm pretty happy with that. It's not bad for, less than an hour's worth of watching something.
Oh, that's not bad at all.
That's
You
glorious.
know, it's progress. Yeah, that's progress. I think mine was about 16% too.
Did you get that order sorted
Yeah.
out?
Yeah. I closed, I think what I did was I had opened it up on my computer and I had processed the order on my phone. And then it kept telling me I couldn't cancel the order and I couldn't modify it. And then it filled it. But that's good.
One
It filled
hand,
it and I did not take a loss.
one hand did not know what the other hand was doing.
Yeah, that's right. Well, I really dig the phone. It's
so fast.
it's relaxed me too because I don't have to sit there and try to figure. I can't move my cursor if I want to go look at the chart, and it's like, oh no, what am I doing? So this is great. This is great.
Holy smokes! Either we're going to continue another leg here, or this is it. This will print a tweezer on the 5-minute, right in that resistance zone. That's what I want to see.
Well, it has a trend day look.
It does.
But it doesn't mean that it won't fake us out and roll us over, somewhere around 11:30 or even 1 o'clock.
And we won't know until it gives us a reversal, but
right,
or reversal or continuation pattern. But remember when I was talking about that measured move out of the megaphone?
Yeah. Oh, let me go back to your screen.
It's been made.
Oh, yes.
Off the regression line.
Well, Jeremy,
Ba-boom.
You know a hell of a lot about options.
I've forgotten some.
Well, I still, for me now, we got futures, I've got directional options, and now I've got the Robinhood account. It looks like an M-top almost on a 10-second.
It kind of
And so it's just balancing them all at once and, getting to the speed of the spread on the Robinhood. You got to sit there and find your spread. So
right.
I could probably do that a little easier looking for it on TOS. But yeah, it's getting better. I just have to, the challenge I've always had when I start new stuff is not cutting my losses soon enough.
Right.
But then, I get my footing like I've got my footing now on options. And we're going to push a little more, it looks like.
Here we go. Watch that key resistance point, 373.40. That's where we went to. There it goes.
Yes, that is a key resistance point. That is, what is that? I have that highlighted, a specific color. That's 373.40, which it just wicked into. That is I believe that's a volume profile level that I have. Or is that a pivot?
It's got to be a pivot. I know there's a pivot at 373.50. We were talking about that one yesterday. We just didn't highlight it. I still got to draw the chart out, and I'll get to that in a minute.
That is a pivot. 373.40 is a pivot. That's what that is.
All right.
Not a volume profile. Wow, look at that. Look out, buddy. That is, wow, that's trending.
My nose was itching.
So, yeah, what, did you tell a lie or something?
Nope.
So I like this now. If we take my little box, I need to go put some stuff in chat. I'm sorry about that.
All good.
And I take my rectangle and I stick it there. Yeah, I've got 374.74 as a rough target that we're going to head. If it completes the first leg up, that first 5-minute leg up, if you will.
That's setting up for a
Measured
measured
that.
move.
I measured that. You know me with my boxes. Let me come on over there with that box and show you.
Like 374.25.
Let me get this in chat.
There's an end pattern in store. Right on, right on.
Dude,
Good.
the,
AFRM is back above 17. Thank goodness. Hopefully she
yay.
can still keep
For her
those
birthday.
puts open and get ready to sell calls later.
Okay, so the shadow box has the measured move.
Ah,
If you look at my shadow box.
dang it. Why's my nose itchy?
You know, doesn't that mean money's coming or something?
I hope so. There's nothing white up there. I never touch that crap. Oh, hell no.
God, thank God.
Oh, man.
I hate
I-
being around
I
that.
keep the
Right.
lines on my chart.
That's right. Shadow box is.
Oh, I've known too many people who've destroyed themselves with that crap.
I'm in the music business. I know
Yep.
way too many people. And then it's like, you know, somebody's like, why is somebody being such a jerk? And it's like, well, I know.
Yep.
You know, why is so-and-so rushing the damn tempo? Well, I know. Come on, you don't know? I know. So there's the shadow box that I put in there. You see that 374.84? That's the low of. That's actually yesterday's low. So that little shadow box is the way I measure those moves. I took the length of the that low 368, but I grabbed the opening of that candle and I ran it all the way up to right to the close of that candle right next to that big red bar, and then I take that box and I activate it and I move it right to the bottom of that where that other candle was, and that's how I get those. I measure those moves. That's one way I measure them, and I got that from Sig. Sig, if you're listening, we like you. He's a brilliant dude too.
He is, and
He
I
is
always say
absolutely brilliant.
he's probably forgotten more about options than I'll ever know.
And I was watching that video he put up yesterday, and I was like, dang, I'm sticking with price action right now. Price action is my friend. I'm like, whoa. And he's talking about, you know, y'all talking about rolling stuff over, and I hadn't got there yet.
Yeah,
But I see it. I see it, and I understand what's happening. But you have to have an account big enough to do some of that.
right. That's the thing. You've
You're
got to
not
make
gonna
sure
do
you
that in
leave
a
yourself.
$50 account.
You got to leave yourself some headroom to do that. Is what you got to do.
Right.
And
Right. So
you know, our intent and purpose is to help you grow that $50 Robinhood account into a $5,000 Robinhood account.
well, we're going to do that. I might grow it with futures, but we're going to
Yeah.
futures. Oh my
Oh.
gosh, futures. I think Trey said it yesterday. People should be trading futures. You're right. But you got to get your price action down before you go screwing
Yeah.
around with futures, because that stuff will melt your face.
You got to
You will
know
blow
it.
up an account quicker in futures than anything else.
If you get excited trading options, don't trade futures. You need to be
No.
calm as a bomb, dude. I mean,
Dude,
it is
it is a
absolute
beast.
havoc on your brain if you can't put that aside and just trade the damn chart. I mean, period. There's no other way to say it. You've
And
got
I'm like,
to
yeah,
have absolute control over this.
absolutely. And I'm like you in the sense that, you know, I'm not a big paper trading fan, and neither was Sig. There's a push, and however, I am a big fan of Tradovate's paper trade in the futures.
Yes.
Because it's exactly the same as if you were trading it for real. You can use all the indicators. You can put in all your stops just like you would normal, not like TOS doesn't let you use certain things when you're paper trading. And so it's brilliant. It's brilliant to do. It doesn't cost a lot, but don't, unless you're ready and you've really paper traded on that for a little while, don't go screwing around because you'll lose a lot of money.
Right. And paper trading is a double-edged system.
Yeah.
It can inspire false confidence. But what I want to say about it is try it both ways. Try it.
Federal Reserve Board announces termination of enforcement action with Agricultural Bank of China. An
That's news.
Agricultural Bank of China, New York branch.
So
You got news.
I got some I don't know if it's coming off of because I'm logged into money.net too, so I'm wondering if I got the audio switched on or something. But it pulls up an announcement in my ear. I don't know if it went live or not, but there's some issues going on.
We've got loads of bad news coming out of the UK.
Yeah.
Loads.
So this is going to be possibly the top of the range here, guys. That is a half measured move. It made the measured move outside of the megaphone. This, if it's going to tip over, this is where it will. But I'm going to wait for the break.
Yeah, wait, because that's,
I'm not
still
touching
got a
that
little
setup.
ways to go.
But anyway, I was getting back into paper trading. So with paper trading, the thing to do is mix it up. Go in, trade an obscene amount of money that you wouldn't have in your account. Play with that, and just make some slightly larger than life orders. Go ahead, but don't go too extreme. I mean, like, don't go and open a $50,000 paper account on Tradeovate and then trade 26 contracts or however many it'll let you do at a time on the ES with that. Do not do that. Do one or two. And essentially use that as a tool to think of it as trading with someone else's money that you don't give a damn about. You're absolutely not caring about the money at that point. You are trading the chart, and you're doing it with some backing to where it's going to take your nerves out of it. And don't take that into a habit as trading your real money with that, but use it as a tool to be able to use that as a way to detach yourself mentally from the money in the account and just trade the chart. That's what I'm getting at. So you'll take that $50,000 account and just fart around, little base hits, little one or two contract trades over and over and over again on ES. If it looks like the two screenshots that I shared yesterday and the day before, that's appropriate for practice as well. And when you get it down to where you're consistently profitable, at least you're winning more than you're losing, you're doing it right. Now, reflect on this more as if it is a separate emotion itself. Think of it as a mindset that you want to be in when you're trading your real money. Okay? Run that account for a while. Start looking for building practice in trading your chart setups. Stick to the old, let's practice the same kick 1,000 times, then we'll learn a new kick. Go and find your patterns, the pattern that you like the most that works the best for you. And it doesn't have to be my pattern. It can be your pattern. What you see in the chart that makes the most sense to you, trade that first. Make sure you master that to the point where you can do it in your sleep, literally. Like with your brain shut off. On your worst day, you can still do it. That's where you're going to get that practice. And then, when you've mastered that, move on a few more kicks. Keep paper trading that $50,000 account for, I would say, at least until you've got just fluidity where you can just pop on, look at a chart, make a trade, make a profit, look away for a second, do something else, go back to it, analyze the chart, make a quick trade, look back at it. Master that. And then, once you've got those at least a couple, 3 patterns under your belt that you're really, really proficient at making profit on, now go and take and deduct that account down to let's say down to $500 and start trading the MES. Use the same mindset that you were on a $50,000 account, but you're going to be a little bit more risk averse because the account at $500 is much more easy to blow up at that point, even though you're trading the MES. Practice that with the MES, master that. Just focus on trading consistently profitable, but make it an effort to take your mind off the money in that account. But know that it's there. Know that it's only $500. Know that you can blow that up in not a very
you can blow that up in a day.
Yeah, you can blow it up in a day making bad trades over
one trade. You can blow that up if you're not careful.
Yeah, even on the MES. So the point being is that suddenly you've got a little bit more risk aversity built into your trading style. Even though you've mastered those patterns, you've got to figure out how to deal with this risk aversity in a way that doesn't set you off emotionally and turn you into a very well, let's just say pragmatic trader, you just you can't get over a hump, or you can't quite get past a certain barrier. That's the point where you're going to be like, okay, well, putting that very real, I can blow this account up real quick, like if I screw this up, in your mind is going to help you build risk adversity. But your job is to make sure you can turn the emotion off that's attached with that. So you've still got to be able to focus on trading the chart. So comparatively, it's going to take you a while to figure out how to turn that $500 account into even a $5,000 account. When that clicks and you start to be able to do that, reset it, do it again. Reset it, do it again. Do it 2 or 3 times. Then start thinking, okay, can I take real money in this? Can I maintain this mindset? Can I take a $500 account with my real money and do this? And tell yourself, if you've done it before, and you've done it over and over and over again consistently, and you are able to keep that focus, that you can do it again. And then you take your real account, you put it together, and you just stay in that mindset. You're just focusing on trading the chart. You're positive. You've told yourself, I can do this. And you keep that attitude. Do not ever tell yourself you can't do it. Because at that point, you can do it. You've proven it to yourself. Market conditions may have varied between then and now. That's something to factor in. But the process is still the same. Whether you're trading bullish or bearish or whatever pattern you might have found that works best for you, stick to your guns. Stick to your mentality of I can do this. And stick to your mindset of just trading the chart. And ignoring the fact that you can blow that account up. When you can build that together, it's going to make a real big difference in your trading, I think. And even if the worst case happens, you start to realize that there's a certain amount of drawdown on that account that you'd rather not lose. Okay, reassess. Go back to paper trading. Learn the process over again. Rinse, repeat until you get this to a point where it becomes fluid and consistent. You can just switch your brain off and trade and not overthink it. And then go back into it, try it again. Build yourself to be able to not necessarily trade like a robot, but just to be able to just to be able to do it almost subconsciously without really beating yourself up and not telling yourself anything negative. Just reinforce yourself on the good side. It will make the difference in your trading, and it may take you even a couple more tries after that with the real money situation, but you'll get it. Just keep consistent at building what it takes to turn yourself into, well, let's just call it a trading machine. You're literally able to control everything and trade the chart. It's a lot to say.
Good. That was a lot to say. And it's true, though. And we're sitting here watching things. People probably have questions. But the thing, that this is why I push penny stocks. Because if you're going to trade futures, man, penny stocks is a great place to learn because of the volatility. Because those candles twitch a lot in the futures. But, your stop losses are different. And you can get used to volatility, high volatility, and unpredictability trading in penny stock. And in doing it a share at a time, and I preach this all the time, a share at a time. You don't have to go big, and you can set a stop loss and only lose pennies on a few dollars while you practice charting and you practice the volatility. Of course, you can only really go bullish in penny stocks, but that's okay because, man, identifying those bull flags is your first step to being able to trade, because when you can identify the bull flags, then okay, this is a pullback right here on a flag, and this is the second leg of this flag on this pullback. And once you start being able to recognize those pullbacks and it's coming to the 8, oh, this is an entry for me, so I can get in. And then you ride that next leg up. Man, that's a high once you start getting that, because what was it, Jeremy? I think that's all I traded was flags in the beginning on penny stocks, and I was doing really good.
You get fantastic at it, man.
I was doing really good. But now, then you can move on to the other stuff, and you start learning. Oh yeah, if I just the inverse of bull flag's the bear flag, and you start seeing those, and then you learn about consolidations, and then you learn about, compression and accumulation, and you start seeing those things. But you can see it in the penny stocks and trade live without hurting yourself.
Right.
So anyway, that's my speech. And you practice your entries too in the penny stock.
Yeah, just get that kick down, man. And there's other parts to this too. Like
There's lots of parts.
base hits are like probably one of the most important factors to deal with too. Is like you don't want to always be swinging for the fences. Sure, you know where your resistance and support zones are, but like you look at my trading from yesterday and like that really big rise, I more or less stayed out of most of that. I went and shorted like a quarter of a candle on the way on that rejection real quick. Like, I mean, that took me like 1.8 seconds to get from the buy or the sell button back to the exit button. That fast.
That's awesome.
And that trade was over, and it made a nice move and made a really quick amount of cash on that one. And the thing is, when you start to see it form a structure that makes sense to you, and you start to be able to be like, aha, I can trend little pieces of this. That's where things start to get interesting, because you can go and find a channel and you can like short the top, buy the bottom, short the top, buy the bottom, short the top, buy the bottom in that entire descent, rather than just staying short and riding the whole trend. You can scalp every stinking part of that trend if you get really good at finding those channels. And it makes it so where you can trade just automatically on that. And a lot of people would freak out going, what the hell are you doing? You're sitting here, you're wasting commissions. As long as you're making, 2 or 3 pointers every time, it ain't gonna matter. It's gonna eat the
$1.58 in and out, one contract.
Yep, you're gonna take care of commissions on that for sure. You're gonna be able to get practice on a really high speed rate as far as learning those kicks over and over and over again, and you're gonna generate profit that's exponential to that whole trend. You're gonna trade candle for candle in that trend. Sell resistance, buy support, sell resistance, buy support. Angular all the whole way down until you find a reversal. Then you can just flip it. Buy support, sell resistance, buy support, sell resistance on the way back up. And your chart's going to look freaking psycho with all the trades you make on it, but it'll make sense because instead of just riding trends on a longer term, you're scalping a 10-second chart over and over and over again. Dude, those little base hits, those little 2 and 3 pointers, they add up fast. Let me tell you what. It scared the hell out of me how fast those added up when I started scaling into the MES, and then I got to a point where I was trading like 10 contracts at a time, which was kind of dumb because I was eating it in commissions, but I was still making money. My scaling was just I would go and do 2 or 4 on a trend and write them in, write them out, and I'd average in, average out. By that I'd say never average down, you average up in a trend. Buying the pullbacks, rinse, repeat, close the whole order at the top, run it back and forth. And I was like running at some point. I had a situation where I had to have a limit order set at like 20 MES contracts, but that was to reverse a 10 contract position. And one morning I had that I'd forgotten to change the numbers and then I went and I think I remember I went short on a resistance rejection on an opening range candle. It was like the first 5-minute candle of the day. And it ran and made a really nice return on the P&L. But then I looked up and I'm like, oh crap, I've got 20 contracts open. Well, close that down right away. I don't want to trade that kind of size because I didn't realize what that could do if I had a glitch. And the other day, was that Friday? I had 2 MES contracts short going into the close, and I got locked out of my account for 15 minutes. I couldn't trade it.
That.
And
That's crazy.
At the time, I made really quick returns. I built that very small account up into something significant in such a short order of time. I had to stop myself and look back and like, what was my actual risk involved here? What did I do? And then I realized, I'm like, if I would have had a snafu, like the power went out or something happened, and in the speed that I trade, it would be so significant of a loss that it would potentially burn that account down in one wrong move should there be a bobble where I lose the ability to trade. It's like taking your gun out of a gunfight and you're being hailed with bullets. You have no return, no recourse, no action you can take to stay in the fight. You're done at that point. You're just sitting here taking it. So it's like all of a sudden you have no means of controlling your trade, and you've got to realize what your risk is on that. So if you're in a situation where you're long or short 20 contracts or something like that, that's going to destroy you quickly if you have that kind of a bobble. So I took it back to just focusing on little base hits, 1 or 2 contracts at a time, whether I'm trading the MES on a small account or trading the ES on a bigger account, to where it's not going to destroy me in a situation like that. And the time it takes me to get a broker on a phone or in chat to try and get me out of that position can mean a difference between a significant loss, sure, but the risk for the account sizes is where you're going to be very adamant about staying within your realm of control. And if you ever watch my live screen on a futures account, I'm looking at my day margin never exceeding like 3% of my account. That's where I feel comfortable running these 1 and 2 contracts at a time. And oddly enough, I'm still running similar performance to when I was taking higher risk and scaling in and out of many contracts. So it kind of came to me that it would be very beneficial for people to paper trade the same way. So take that $50,000 account, 1 or 2 contracts at a time, run it in the same strategy, and then reduce that amount to a small account, and then run it in a similar strategy, only using MES instead of ES contracts, and give that a go. And that's where you're going to get the feel for it. Being able to take those base hits, staying risk averse at the same time. If you have a bobble where the account locks up or something happens, power goes out, meteor hits, whatever, you've got some recourse there. You can at least be okay to take yourself out of the trade and other means, and it consumes time, and time is going to be working against you or with you at that point. But it's going to let you know there is risk there that you have to consider. And when my account was locked up, I was short 2 contracts. Of course, the price dropped. It was going with me very well, and then it wicked and bounced right back almost to where I had sold those shorts. I'm like, oh crap, if this thing reverses on me and runs away from me, and I'm stuck in this trade short, I'm going to be screwed here in a minute. Fortunately for me, it continued to just rally down. It ripped the face off in the downside, and I made a really nice return on 2 MES contracts into that situation. But that could have been a hell of a lot worse if it was an ES. It could have been a hell of a lot better if it was an ES position. So my risk was very much limited in that situation. Not that I knew that I was going to be locked out of my account, but through the day I did have a couple clues.
Sig's typing. I was just thinking about Sig. Sig's typing because I was going to say Sig has his broker's phone numbers and everything. Mm-hmm. He's got it ready to go on a pad in case anything happens like that. Yeah. It looks like we're trying to break back. We tried to hold that 15-minute range on SPY. It wicked down into the opening wick, so that was a test of the open on the 5-minute, and we'll see if this thing closes some sort of, what do you call it, morning star, and that may have been just a little pullback, and we might continue that trend. So got to see what happens on this 5-minute close. Just wanted to say that.
Zoom out on your 1 minute. What's that look like to you?
Let me go to my 1 minute.
Dun, dun, dun. Head and shoulders.
On the 1 minute.
Yeah, this is a point where things can really flip.
Yeah, this is that point. It's that time of day, too, so we shall see.
Let's start doing what we should be doing. Let's call out some price action here. We're in a 20 period. Looking to print a tweezer here. If we smoked at 8 period, we can start trending right now on the 1 minute. That's very plausible.
We come on that descending channel.
Yeah, there's our megaphone. I extended that out.
Those levels we're so close to, and we're building on top of a level. So that wick also on that 5-minute candle wicked into the top of a candle at 9:15. I think it's 371.80. I had that somewhere else too.
There we go. 8 period. Broke the 20 on a 10-second chart.
2.5 minutes left on this calendar. I mean, this candle.
Here's your 5-second chart watching this move here. We can M top here. And it's so cool to be able to see that pattern on 2 wildly different price or time frames. Look familiar? There's a 15-minute chart. There's a 5-second chart. And it's
Let me get you back up over here.
critical support right there. That could break.
Yeah.
That's cool.
It break. Yeah, it can break. Yeah, we're getting hanging fruit here, so let me see. We still have a minute and almost 2 minutes on this candle. On the 5. But, yeah. And are we breaking over that? Yeah, we're below the 20, aren't we?
Yes, looks like it wants to retrace 372, which is half of this trend here.
Yeah, 372.04 I have as a something. Okay, look out. So
There's your test right there. Right
minute
through
and a
the
half.
period.
All right, it's getting that bearish, bullish look now. Trying to see if it wants to. 928.22, 370.230 was the high of day. I like labeling those things. I need to remember to label them more often.
Indeed. All right, now we're
Because
back to
it tells you what's going on.
if we were to draw like a short-term pivot through here.
All right, here we go.
Well,
Last
back
minute
to the
on this
mean.
candle.
Just about.
Oh no, looks like it might just drop. Let's see. Are you okay? It sounded like you fell.
That was a weird sound. Gosh, we're getting busy, man.
Guys, you know when you're talking about penny trading, live and paper trading, penny trading live. You know, I'm finding it really difficult to execute these fills at realistic prices because obviously of the lag and everything like that. Is it worth me just like starting to penny trade with real money just to get a more accurate entry and exit point?
Why don't you just use one share? Absolutely.
You know, we're only risking pennies, really, aren't
You're
I?
only risking pennies, and you're keeping a stop loss. Yeah, we're gonna roll over on this one.
And that's
Yeah.
another great thing. You can compare that to paper trading.
Yeah. You say what?
Compare it to paper trading, you learn a lot more because you're using real money, even though it's one
Right.
trade.
Yeah. Yeah, and you're getting real time data, and you're
Yep.
getting to use all your real indicators, and that's the thing about it.
Exactly, and I'll be able to actually keep track of something that would be useful to everyone in the group because I could start looking at stuff that's in real time, you know? So what I'm going to do is I'm going to have to work out how to use my Tastyworks account to penny trade. So I'll have to start doing that tomorrow. But yeah, I'm already sick of paper trading. I can see what I need to do. I just accuracy with the paper trading account, so I'll try and do some proper ones tomorrow.
Yeah, that's why I like. Of course, I don't know if you can get it. You might. That's why I like the Trade of 8 for the futures because it has good paper trading.
Yeah, I don't think I can get Trade of 8 in the UK. I'll have a look though.
Yeah, Tasty Trade TOS sucks for that, and they really, maybe we need to write them a letter. They need to start giving people real time data on paper trading
Yes.
instead of giving them fake data. That's just ridiculous.
You can get real data on paper trading, but you have to have money in the account, which is fine. I would do that, but because I'm British, I can't open an account with them, so I'm stuck with this lagging data, and it's 15-minute lags as well. So
Somebody,
Sucks. Look, we got a bull surprise.
yeah, descending megaphone. I just realized.
That's the signal I always look for. That's a red hammer right on that 372.04.
Center line. I'm drawing it as fast as I can on the 5-second chart, but there is your target right there.
Wow. Yeah.
Measured move
All right,
outside
so
the megaphone off the regression line, right to 372.56.
All right, there it is.
Nailed. Faster than I could draw it.
Yeah. Well, I was looking at it and I was saying, well, if it goes below this and it does that and it does this, so here it went below the opening range. It's wicked into that candle
I
that
think
I talked about at the 371.80.
I think starting next week, I'm gonna try and maybe I'll do it with paper first, just to be more. Well,
Maybe not. Here we come again. It's a good time not to be trading.
I still want to teach price action with that 10-second chart. I still want to be able to do some futures trading on this, but I think it would be safer because it is a lot of work to show that, be live with those trades, and teach at the same time and somehow miraculously draw out. I mean, I drew that on a 5-second chart, and that price action happened faster than I could draw it.
Right. Yeah.
But I want to be able to teach that. So, like, I want to go and start doing the paper trading on. I think I'm going to do it with a trade of a paper trade, just to show live price action trading. So there's no pressure. I'm not going to have my
And
real
then
money.
you don't show your real money to everybody on
Right.
your trade of it because the demo doesn't do that, right?
Right. And it just
And you don't give your info away.
it's a little more comfortable too to boot, to where, like, I'm not going to have any stress in it. I can just walk through it, trade the chart. I won't be thinking about my actual position. I will be thinking about a paper position, but I'll be thinking about it the same way. It'll make sense. I'll start with that, and then later on I want to roll into doing that with real money, because I want to show people what is possible with this futures trading and price action, and the importance of learning price action, just in that alone. So I'm going to have to make sure that I produce kind of a disclaimer every time and be like, look, I'm doing this with paper just for demonstration for now. I want to do this with real money later, but do not just follow my every entry on that. Don't do that. Just learn and do it in paper, but don't do it in real life just yet.
Fakey there.
Oops.
Right. All right. So that was interesting. So that gave us a little gave bulls a little false hope.
Look at the structure on the 5-second chart. Beautiful. Megaphone, descending megaphone, regression line push, measured move outside of the angular resistance, just like we see. The distance here to here is equal to here to here. Knew it was 372.55. I had 372.56 as the resistance point. Penny. But it made that move and rejected. Boom. Came right under the 8 period. Trended down, 8 period cross 20, just like we do with the 10-second chart. And where'd it go? Straight through angular support. Came back, tested it, and then continued on to the regression line. Textbook for a megaphone pattern trade. You cannot, take a screenshot of that. I'm going to take a screenshot of that. Textbook
Let's see
megaphone
what happens
trade
here.
on a 5-second chart.
That says we don't like no bulls.
Nope.
No bull around here.
Keep drawing.
Bear scat.
Extend your lines, people. Whenever you see a pattern, line it out. Stretch those lines out as far as you can see.
Look at that. So looks like maybe no trend day.
Maybe yes, maybe no, but more no.
Right now, on IWM, I've got 1, 2, 3 dojis like in a row on the 5-minute.
Well, we had our 5-second chart megaphone here, right? What do we see on the 5-minute chart? Same. Measured move outside, back to angular angular support now. And if it breaks that, we know where the target is. Center line of the megaphone.
Oh, look, there it is. Bob. bah, we say no.
How stinking
So
cool
what we
is
have
that megaphone?
there is a pullback on a bear flag. Now possibly resuming the trend. Me see, said a blind man. Well, let me go check the penny stock world. And then penny stocks. Yeah, they don't really like us to talk about not paper trading, but at the same time, I had a hard problem with it too, Victoria, and that's exactly why I stopped it. It was frustrating, and I had money in my account, and I got real-time data, but they wouldn't let me use the indicators.
Right.
And I'm in Bullish Bears learning about all this stuff, and everybody's giving me indicators, and I can't use them. So I was like,
That's
I'm
rough.
going real money. And I'll just trade a share at a time.
Yeah, that's what I'm thinking. I think it would be easier to trade a share at a time on a realistic platform with real data and just risk pennies than it would just faffing about here, you know?
Absolutely.
Well,
That's kind of
That's how you graduate from trading paper at the pennies.
that's what made me as a trader. That's what made Stone as a trader. Come to think of it,
Made us. It's exactly what I did. I had a plan.
yeah. There you
I
go. You had a
worked that plan.
Oh, you worked it.
I still have plans, and some of them I thought would happen a little quicker, and now it's like, nope, not as quick as I thought it would be. But my plan's still in place.
Yep.
My method of getting there and all had to be adjusted a little. All right, are we coming back down? That's pretty. That's pretty big there.
Oh, look
That
at
is a
look at
pretty
that 5-minute
big
megaphone.
buy.
I posted two screenshots in the chat there. One is a 5-second chart megaphone. The other one's a 5-minute, and they're virtually identical. Targets are the same. And don't think of
You get
price targets. Think of trend line targets in the megaphone. And trade accordingly.
Yeah, this is a good one here. So at some point, I'm going to record a lesson for this weekend.
Good God, I got like 8 messages.
Hey, you know what I need? I need this thumbnail that you use when you put your video up. It's like, is that Camtasia?
The spy analysis one.
Yeah, that was great.
I had
I got no thumbnails, man.
I asked Lucian to build that one for me, so I can just send them to you.
Yeah, as long as it's not just it's the actual thumbnail. Last time I think you sent me one, it was small and it didn't look good.
Oh yeah. Was that
When
was
I
a
uploaded it.
copy of a copy or something?
Yeah, it was like 122 kilobytes. I was like, that's not going to look good when it gets big.
You know what I can do? Let me pop.
Yeah,
open
it's something like
email.
that because I really like them. They look good, and I think they make the videos look a little cooler.
Yeah, I gotta sign off YouTube real quick. So, thanks for hanging with us, guys. Check us out. Hit that like and subscribe button. Hit the bell. Get that announcement. We are putting stuff out every day, and some of the amounts of knowledge we're dropping for free to YouTube seems preposterous that we would do so. But what's behind closed doors is much, 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 much more than that. We drop these little nuggets just to show you what we do. You're the one who has to decide if you like it or not, and we appreciate that you're hanging out with us to begin with. But if you really like it, check us out internally. Give us a shot. I'm going to sign off now. We'll see you guys. Tomorrow I'll be on here. I'll be kind of spotty tomorrow. I got a lot to do, but I'll be in tomorrow anyway. We'll stream. We'll start drawing some stuff out. Crud. Before I sign off, let's run that spy chart real quick. I got to do that.
Look
I promised.
at that spy chart.
I promised.
I
got to do it.
Us.
Let's go with the full screen. And let's go with let's start with a 2-hour. Okay. Diamonds everywhere. Okay. Let's start drawing some out here. We've had these drawings on the chart before. I erased them because they were getting quite cumbersome. They were getting in the way, and as I said last night in the video, that a member of ours was outspoken about this because he was watching our stream on his phone, and that can make it very difficult to see the price action beyond all of the dope we have on the screen with these lines everywhere. So I'm going to draw it out, and then I'm going to erase it again because I like to make sure I'm going to stay consistent with that and make sure that we provide the best quality, not just for the entire group, but occasionally we go into individuals and be like, look, we're going to do what it takes to help you become a really successful trader. And if it means catering to your every whim, so be it. We do that. We're okay with that. Don't be afraid to ask us to do something a certain way. We are absolutely 100% with you. We want to help you. Okay. Diamonds everywhere. This is a 2-hour diamond here. This is a big stinking diamond bottom. Let's look at what history tells us about those. There was one here. There was one here. There was one here. They're everywhere. Once you learn how to draw them, you won't stop seeing them, even in long-term charts. And if you see them in long-term charts, you know they've been going on forever. Just no one ever recognized it. It's not a new pattern, but it is a rarely spoken about pattern. It's rarely drawn this way. And that's where you have a little bit of an edge, is you're learning them. And I've only really known about them for about a year now, so let's take that with a grain of salt. Look further left, we've got more diamonds than you can shake a stick at. We got one here. This is back in the day. And this diamond pattern, I in the description, I subtitled the video I put out last night, The Diamond Pattern Strikes Again. Alright, so no go on the bull side there, but the bear side line, draw that sucker all the way out. And you can see wherever it went, price did some things here, there, everywhere. In fact, there it is right there. Anytime you see these things, draw them out. Know where they are. There's one here. I won't draw that out. It's a waste of time. This is the important one in the room right now. This sets our range for today's price action, which we are kind of working with. There was another one in the middle of the diamond pattern, or middle of the M top here.
Spy.
And look at that. There it is right there. And I didn't draw that out last night, but let's draw it today. Uh-oh. Did we see that strike today's price action? Holy smokes. Alright. And I won't draw the whole thing, but let's draw the angular support line at the base of that thing.
That's like a funny double bottom on the 5-minute chart.
You know what?
Hey, went back to the top of that range.
Let me put those in purple. I usually do wolf waves in purple, but we're not talking about wolf waves today. We're talking about diamond patterns. We'll let the wolf sleep. Alright. Since I got those in purple from that diamond from the M top and white from the big diamond to our further left, now let's drill down into a 5-minute chart. Alright. Find purple. The more recent diamond top or diamond pattern in purple is governing this range right here, and this looks a hell of a lot like a triple top, or head and shoulders if you will. It's met targets all over the stinking place, and every one of those trend lines extended from the diamond patterns in the past is significant today. There's two different diamonds at play. There's the purple diamond and the white diamond, and they are all working. Alright, so if we get to be bearish today, first we retrace the entire low range. So we go back to, and I'm not going to bet money I'm going to trade it as the chart tells me to. If we get one of those days where we retrace the open 100%, and you can take your quant tool that you have there, Stone, and probably find the same answer. 369.20 would be about the base. Maybe 369 should be the key pivot here on today's low range open. Candle 41, middle of the day, is going to tell us a bunch of clues about that, whether we're going to regress that or not. Like it or not, we do have a triple top here. We do have a trend to retrace into multiple levels, and we've got angulars all over the place from our diamonds, our megaphones. It's all there, and it's all significant. So it's quite baffling to see how those just react, and those levels are known, whether they're subconsciously known or not. They're there. So feel free to draw on your chart. Don't get overwhelmed and choke it up so much that you can't see the damn candles, but just know where things are. And you can always switch the off button so you can see it more clearly with the candles and then add your lines. The point I'm trying to make is whenever you see a pattern of significance, such as a diamond pattern, extend those lines out and you will start to really see how much you can predict price action between angulars on those things. And man, when it works, it freaking works. I mean, look at yesterday's range. Clean. I mean, you couldn't get any better than that. That's why I felt confident and calm and collective trading that yesterday. Yep. And here is why I felt calm and collected trading it the other day. I knew where all those lines were without having them drawn on my chart. My chart was blank yesterday with these lines. They weren't there. And the day before, same thing. Stone was streaming on Tuesday. I was streaming yesterday. I didn't have these lines on my chart while I was streaming, but I knew those levels were there. And it made my trading a lot easier. I guess I'm going to have to make an adjustment to where I can have maybe, I might have to do it with two brokers or something, but I can't like have the lines on one chart and off another time frame for some reason with people. I haven't figured out how to do that yet, so feel free to comment if you know a way. Teach me something. But for now, I guess I can try and use a second broker so I can have a separate set of charts to where I can have one with the lines, one without. So you can at least have a way to see the damn price action between the lines if you're looking at this stream on your phone. So I'll try to make everybody happy, but you know, it's going to be down to just kind of bearing with me until I figure out how to make everybody happy. I will find a way. That's the kind of level of support you get from us when you join. You get that accommodation. We will do whatever it takes to help you guys and teach you guys and show you how to read a chart for yourself. And it just, that's the value we have to offer, guys. Plus our options knowledge is incredible. Sig isn't technically with us, but he's supportive. He's still kind of here doing his thing. He's not as active as he was before. He's busy with going back to school, getting his PhD, but he still helps tremendously, and he still provides those briefings every morning. And man,
valuable.
I don't know that all saints are as ornery as Sid can be. He's straight to the point. He's a brass tacks, tell it like it is kind of guy, and I absolutely honor and respect him for that. And you know, Saint. The dude is just awesome. So
he is awesome. Just
really,
don't get on his lawn. You'll be okay.
Don't get on his lawn. There you go. That's.
I hope he heard that.
Get off my lawn. No, like sometimes you ask him questions, he'll tell you. You know what? Go do the research. Look it up.
He's a beast.
And that's not to be mean to you. That's not to tell you to leave me alone and get off my lawn or get away from my trash can. It's
love.
It's love, because if you go out there and you read this for yourself and you make the effort to learn it, I mean, you could pay $1,000 for membership for a month to someone else and still not learn this stuff until you learn it on your own. We can, lead you to the knowledge. We can show you it working in live action. But if you want to understand it, do the research yourself, learn it, and it will really clear up a lot of personality types in one zone if you actually can just break that wall for yourself, whatever's preventing you from finding that knowledge yourself and learning it yourself and reading it and studying it yourself. Do it. Do your homework. That's the bottom line. We can show you and instruct you all this stuff over and over and over again, but you've got to go and read it, study it, and learn it for yourself more than anything as well. Even though we drill it into your heads all day long, take the time to really either decompress and analyze it yourself, go watch the videos, slow it down, learn it one string at a time like you're learning a new song there, to paraphrase Stone here. But one way or another, you've got to be able to learn this on your own as well as catch it from us. So that's all I can say about that. The Blind Trader, I learned a lot in my time with BB. Great community. Thanks, man. And the Blind Trader here, if you catch him on Twitter, the dude has got tons of insight, and he's out there paying it forward every day outside of the community. And man, I'd love to have him back in here helping us on this end. So maybe we can reach out and get in touch with each other. I'm making time to get out to you and hit you up on Messenger and start talking about things like that. But in the meantime, man, it's awesome to get to know you. All right, guys. Well, I'm going to sign off of YouTube and call us a day with that. I'm going to go eat some lunch, and then we're going to come back and eat the market's lunch later on.
You're right.
All right, guys. I'll see you later on YouTube. Have a great night. I'll see you guys tomorrow morning, and we'll start the party.